Welcome. It's good to see you, Judy. Judy, you say inflation is coming down not because of the Fed's efforts, but in spite of the Fed's efforts.
I really think so. The Fed's plan is to raise unemployment, and that's how they would intend to fight inflation. But what we're seeing from the numbers is, in spite of their efforts to raise interest to a level sufficiently restrictive to cause higher unemployment and to curtail economic growth, we're getting some growth, and we're seeing that unemployment is remaining not only at record low levels, the lowest in 50 years, but we're even seeing the participation rate inch up. And if you think of it, I've always thought that the solution to inflation is going to come from the supply side. So the Fed clearly is only focused on reducing demand, but if it weren't for all of those workers out there producing the goods and providing the services, inflation would be much worse. So I think that in spite of the Fed's efforts to stymie that process, the economy is performing in a way that will help us reduce inflation gradually as the excess savings, as the Fed called all the money accumulated during COVID and through fiscal transfers and as a result of portfolio increases, that plays out.
Well, the Fed's going to get credit probably then, Judy. And I don't even, would that be so bad if we were able to get out of this pickle, have inflation come down, have unemployment stay low, have a very minor recession, if at all, and then people would, should we be chagrined that the Fed gets credit if we have that favorable outcome?
It really doesn't matter when you have a favorable outcome who gets credit, right? That's the famous secret to success. But I think it's very important that we understand cause and effect. And if it's happening in spite of Fed efforts to curtail growth and increase unemployment, then we have to ask if something fundamental has changed and that there isn't this Phillips curve trade-off between inflation and employment. Because otherwise, the Federal Reserve is going to have a negative impact on financial and economic outcomes. And that's unnecessary. So I think it's not enough to say, oh, inflation's coming down, let's attribute that to the Fed's action, because then you could have a situation where the Fed doubles down. I mean, the Fed's model requires workers to feel reluctant to ask for wage gains commensurate with inflation. The Fed's plan only works if employees are willing to accept wages lower than what would keep them even with inflation. So I think from an economic point of view, that's a dubious strategy. And I think morally, it's questionable. I don't think a government agency should base its strategy and carry out its plans accordingly in a way that requires people to get less than they should be compensated because of inflation, which they had nothing to do with. That was not their mistake. So it's important that we learn from what is happening and not attribute to the Fed's actions a reasonably positive outcome in that inflation does appear to be decreasing. But again, I think maybe by mid this year, we'll see that those excess savings have been spent on goods, and the portfolio gains, that's still, we don't know how the Fed will respond to that. I mean, what we're seeing is there is a wealth effect. If the market does well, including if the market does well because I think the Fed's going to pivot, the Fed doesn't really want that because that would encourage more pressure on the demand side. Maybe people feel a little more at ease and they can spend more. So now I see forward guidance is kind of turning into a psychological operation. The Fed's engaged in psyops with the market because otherwise people might feel too flush, and the Fed doesn't want that.